Good morning. My name is Adam Kahn. I'm the Rational Investor. It's Saturday, I think it's August 5th. I hope you guys are doing well. Um, I saw something pretty interesting this morning that I was watching about a new real estate tax, and today I'll probably talk about real estate tax going on in California. People seem to be up in arms on home priced above $5 million, where they're getting a total tax of what looks like to be close to 5%. And if you're above 10 million, maybe 6%. I got to tell you, I think it's kind of funny that people are making a big deal about it because I'm sorry, it's a democratic state. They all want to help people. They all want to help the homeless. They all want to help the less fortunate, but nobody wants to pay for it. Well, somebody's got to pay for it. And if you're spending $5 million on a home and have a $250,000 tax, I got to tell you, I think that's completely reasonable. If you can't afford it, look at a $3 million home. They exist. You're not talking about living in the hood for $3.5 million. It's not the end of the world. And if you want to live in California, that's the price you pay. You help. You pitch in. You contribute, and you get the things you want for being in California. Otherwise, there are plenty of other places to live. So stop whining about these taxes. Recognize the state that you live in and why you're there, and be a part of the community. You don't want to do it? Well, consider yourself not a Democrat. Move to a state where they don't help other people and move on with your lives. Like, it's so silly to me. Wah, wah, wah. You're talking about people buying $5 million homes. They aren't poor. Like, I don't even understand the complaint. I get the complaints of the people on the lower end who can't afford to rent their homes, who can't afford to buy a meal, who can't afford to live their lives. Complaining that the tax on a $5 or $10 million home is too high? Yeah, okay. I feel really badly for you guys. So, that being said, I'll get into more of the real estate in Las Vegas, which I've definitely seen a turn the past few weeks, and I think some of it has to do with, I hope I don't get you all dizzy, but my arm gets tired. It's just, even though I'm in decent shape or better than I used to be, I'm still not in the greatest shape. So the market's definitely taken at least a short-term downturn. Rents are off a good bit year over year is my guess. Just because I personally have a rental where the renter is leaving, and when I look at what rents are for that same property, I'll probably have to drop the rent 20% from where it was, which is really significant. I mean, it's a big difference. And depending on where somebody got into their property, they might have decisions to make. We're really fortunate. It's a property we bought in 2008 or 2009 during the downturn, and we moved out of it and decided to rent it instead of selling it. So we're into it okay. And even after dropping the rents, we'll cover costs and everything else. But if we had bought it the past 2-3 years and we were doing our analysis based on the rents that properties were getting currently, well, our math probably isn't so great anymore. And depending on what the interest rate is, how much we put down, and everything else, could be upside down and having to make a decision of, do we take a loss every month to keep the property, or do we put it back on the market? Because inventory is still low. Prices seem to be holding up pretty well. Maybe you get rid of it, but I think that the rent prices being lower eventually drag the prices lower. At the same time, I think it's going to be short term. I think that supply and demand is supply and demand, and there really isn't a lot of supply. The new builders aren't in any hurry to build a whole bunch of properties. I think they're targeting more end of 2024 or 2025 where they're picturing building more property. And right now they're in an acquisition stage of picking up land and preparing for that. So I don't see a ton of inventory, but I do see some of the investors deciding to list their properties. And as we end the 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 busy season, while people were trying to get in before school starts and everything else, and you'll see the buyers slow down, the sellers that are nervous and really want to sell may end up lowering their prices to try to get their property sold. However, I figure by November, December, the ones that have really panicked will have pushed the price to where they push it, and then you won't have the panic anymore. And we'll have the same type of cycle we did last year, where the sellers that have waited that long don't really need to sell. And there's no reason, for them to lower their price. More likely, they might take their property off the market or just leave it at a higher price. And I think you'd see prices drift back up again. I think it's pretty reasonable that we might see this cycle continue to happen as a normal real estate cycle. See a little bit of a panic after the busy season for those who couldn't get their home sold, pushes prices down a bit, maybe even a good amount. But there's still buyers out there, and if the prices come down, they're looking to get something. And unless there's a huge increase of inventory that becomes too much for the demand to meet, well, I just don't see it dropping at 30, 40, 50% like 2008. The banks aren't failing the same way. You aren't seeing an entire economy collapse. I know there's a lot of YouTubers out there talking about that. I can't figure out if that's just for views and hyperbole to build their channels, or if it's what they actually believe, or even who's actually paying for that information to be put out there. I get it builds viewers, I get everything else, and maybe they actually really believe it, but look around. I mean, yeah, people complain about the inflation, myself included, and I'm not thrilled that things cost as much as they do, but still getting by, still paying our bills, still keeping up. And I'm in real estate, so we've had a massive slowdown. Now, excuse me, to be fair, we were super busy, and anytime you have, markets, anytime things get too busy, it reverts back to normal. And we could even get to abnormal the other direction first. I get all of it, and it would be healthy for the market. We're seeing some attrition. We've legitimately slowed down. But if you've been doing it long enough, there's enough drips and drabs still coming in. There's enough business to sustain. And I think that's healthy for the markets. Like, being overly busy with everybody saying, oh, it's going to a zillion, isn't healthy. Maybe we needed some higher rates and some higher prices to settle that a bit. It seems to be settled. And if there's a bunch of new people in the market as a job who aren't keeping up and need to find something else, well, that'll help fill the spaces of jobs that need people. And that's not atypical. If you've been doing real estate long enough, it has cycles, and you have to be prepared for them. And they may not last a couple of months. They may last a year or 2 years. And that's part of being in that industry, I think. And I hate to admit, for those who are lifetime people in that industry, in the long run, they end up better off. If we slow too much and too many people need to leave because they're not surviving, well, when things normalize or get busy again, The people who made it through that time frame find themselves in an unbelievably good position. And it takes a long time for others to really recognize that and get into the industry. So it gives a nice long time to build business even better. Uh, I still don't think that means we see a big housing crash. I do think we continue to slow. You know, prices might drift higher while we slow, and so might rates. I don't really know my prediction on rates, Eh, but the Fed's really straightforward about if things don't slow down, which I think they are. Like, from what I can see, things are slowing. But if they don't at the pace they'd like, they will at least hold rates higher for longer. Um, they're not going to cut them for no reason. They're only going to cut them to save things if things are falling. And right now, you know, I think I've seen prices in Vegas fall, I don't know, maybe 5 or 10% in reality. You know, the trouble is the data that gets provided is a little misleading too. Even, you know, my brother and I yesterday were talking about median home sale. What's tough about that is if the high end is still strong and the low end has just kind of priced people out, you'll see median home sales go up a lot. And that may not be a real indication of the market because basically I figure people buying homes 3 million and up probably aren't really impacted much by what's going on in the economy. And if you get to the $10 million homes, I would say even more so. I mean, the super wealthy, it's a conversation at lunch, and they hope to get better deals. I don't really see it impacting their ability to buy a yacht if they want to buy a yacht or not. And maybe it does, and maybe I don't understand that level of wealth. But it's hard to imagine that you're looking at buying a 10, 12, $15 million home and the Fed raises rates a quarter or a point, and it's the reason you decide not to buy the home because the interest rate went up and now that monthly payment is just a little too much. That's just a disconnect for me. You know, my guess is most of those are either cash purchases or they're borrowing off of their stock or something else for tax reasons, not really because they don't have the money. So, and the interesting thing is, to go off topic a little, I think I mentioned it in one of my other videos. You know, I love to fantasize about going on like a 6-month cruise. I've been looking online at some of the really pretty ones and fancy ones. My God, to get the captain suite or the owner suite or whatever it is, there's waiting lists out for 2 years. So the top end, where these guys are spending 100,000 plus for a 3 or 6 month cruise to get the nice big suite, there's tons of demand. Now, the regular rooms, they have availability, but it's amazing that the 10 to 20 really expensive ones are all booked out for the next couple years. So the top end doesn't seem to be struggling, and I don't know that the Fed can change that. You know, there's a certain level that unless you're really poor at managing your money and you overspend, that it's hard to believe they can do anything to change that. You know, if you have $20 million and you're not leveraged and investing in risky assets and things like that, let's go safe at this point with a 4 or 5% return. You know, you're making 800,000 to $1 million a year. And if you can't figure out a comfortable life on that, I'm sorry. And to be fair, if the Fed raises rates, you just get a higher income. So what bubble are they going to pop on you? And if they slow inflation so that things don't cost more, and you have your 800,000 or a million coming in off of your investments, well, things just became more affordable. And hopefully you've locked into that for the next 2 to 5 years anyway, so that if rates go the other direction because the economy's slowing too quickly, well, now you're doing better for those next 2 to 5 years. And when your bonds or CDs or whatever mature, you can figure it out from there. On the flip end, the guy who's struggling, yeah, inflation hurts him. Unless they can make more, it's just a tougher life right now. And we all feel it. So I think the Fed's in a bad position. Um, I don't know what I think they'll do in terms of rates. I waver back and forth. I mean, half of me thinks they'll just go until they pop a bubble, and half of me thinks they'll settle down and let things play out, because I do think we've probably gone far enough. I think the weird thing is the stock market almost does better if they continue to raise and raise and raise, because it indicates that the economy is still strong despite what they've already done. So it's an interesting scenario right now. And in some ways, I think if they stop or start cutting, if you own stocks, that's when you want to be careful, because what's that saying is the economy's slowing. But I don't know. Stocks seem pretty strong. Housing seems like it's teetering, but I still think that's just going to be for maybe a quarter while the busy season slows down. And again, I think if you're a realtor or a mortgage person, that probably just gets more people out of the business over that quarter. For the next quarter, things to kind of pick up again. For those of you who've lasted this long, tell me what you think. I mean, really, do you see us collapsing? Do you think that things are just going to fall out of bed? Do you think we keep chugging along? You know, Growing up, I feel like this is a little bit more normal. You know, economy's tough. There's always people struggling. It's tough to get a good job. It's hard to keep up with bills. That sounds like life to me. And yeah, we'd all like to dream about not having to worry about it, but I don't know. Things seem okay. When I go out to a restaurant, there are other people there. When I go to crowded places, they're still crowded. Some things I shake my head at. I mean, whoop, I almost said a bad word. When I looked at my father-in-law was visiting. I love having my in-laws around. Um, and I was thinking about seeing a show. Well, me, my wife, my son, my father-in-law, I'm looking, and just to go to like a typical show in Vegas, it's $150, $200 a ticket. So I'm thinking, my God, one night out for the four of us is $1,000 between dinner and the show. And meanwhile, these things are selling out. I know some people are getting it for free, but at the same time, an awful lot of people are paying for it too. So somewhere, somehow, people are okay spending $1,000 for a night out. That seems asinine to me, but the economy seems to be handling it, despite what's asinine to me and what isn't. So thanks for joining. I hope you guys enjoyed the conversation. Have a great day, and I'll say something in the next couple days.